Ira Epstein with your agriculture wrap-up for this Tuesday, the 8th of October, 2019. And here we are at about 4:30 in the afternoon, and the grain markets had a good day to the upside. Why? I can tell you, yes, we have Thursday, the WASDE report, where we're going to get supply demand both for the world and how our crops are looking and yields and what our supply is looking. The word right now is that the USDA will probably lower the corn and the soybean supplies. But what's really going on is weather is changing, and the growth should end next week. We're due for some hard freezes in key areas, and the first hard freeze is giving the market the go-ahead to say what? Okay, you're about where you're going to get in your growth stage. After that, we'll see what happens, and all you need is that hard freeze, and everything comes to a pretty close end to that. So I think that was the celebration today. The negative is if you're watching what's heating up between China and the U.S. in both words, and now we're slapping visa requirements on people that want to come here from certain provinces. The NBA, a couple of games are taken off. I didn't realize the NBA has 800 million viewers in China. Whoa. I mean, my gosh, it's bigger than I thought. And the largest NBA store outside of North America is in Beijing. All right, so we look at the markets, we see the stock market fell. A lot of that had to do with Fed Chair Powell talking in the afternoon as he was talking about what the Fed is doing, where he's at on world trade and some ideas. And certainly he's not going to tell you if he's going to cut interest rates or not, but they're very concerned about world events. That's what you certainly got out of it. So as we look at this market, we can see on the weekly area chart of closes, we're only 2 days into the week, we're up about 4 cents. The important thing to me is this market's still showing that up thrust, and now it's getting the benefit of some weather. We can see how the market has run to the upside, and if it runs anymore, I'm going to have to drop this part of the chart down so we get to see it, or I'll narrow it in a little bit. But I wanted you to be able to see all this before we get, if we get to that point where the market adds more, if you will, price to this because of weather. We have the pattern of higher lows, higher highs. What was today? If we come back to this chart, today's an outside day up. My theory is that when you have an outside day, be it to the upside or downside, on an up day, what I don't want to see is that low of that day taken out for a minimum of the next 2 trade sessions. The idea here is that the market has moved away, and if you think about it, everybody that is short this market under these prices is wrong. It's quite a long period of time. Where's the market fighting its battle? The 200-day moving average that we spent time talking about yesterday. You went again today, challenged it. So now if you take that number out, what happens the way that I as a chartist would look at it, that would then be a failure, setting up the potential to come back to wherever that 18-day average is. I'm not saying that will happen. I'm saying the market's trying to hold this range and break out to the upside, and where's the resistance? You look at that upper Bollinger Band. You got today to 923 3/4. The Bollinger Band top as of the close was 925 1/4, and it's like it's going to jump, in fact, tonight. I know how the math works on it. So it's going to move higher when we reopen if we're steady to higher from there. That'll be, and still in my opinion, the first resistance point on the chart. And what do we have? We have that embedded reading. When you get these embedded readings, what it does is it converts momentum from being overbought to locking in a trend. And until the red line closes back under 80, I say that on these breaks, this market's being well supported. Now, let's go to yesterday. Yesterday, both numbers were over 80. The day before, they're over 80, and the day before. We already had the embedded reading. So you can see that right through here. When we put on all those averages that you saw right back when we were doing them, you can see where that 200-day came in, and that was the support from the embedded reading part of it. Now, as we get, let me come here with that. So you can see that you're embedded, you're knocking on the door of resistance. Now when we get to the meal market is not doing a trend per se. It doesn't have the pattern of higher lows, higher highs. What it is doing is it's keeping bias to the upside, momentum there, and the market is knocking, like in soybeans, up at the upper Bollinger Band, and here's what you've got. Generally, not always, the first challenge of an upper Bollinger Band combined, like you did here, with the 100-day average is a resistance point. That might show up again tomorrow, but at some point, if you flip over this, you got to be very concerned. If you're short, this market could be painful. So you're in an area that, as a chartist, is very important. I wish it had the pattern of higher lows, higher highs. What I did like today was notice that meal's up $4.80 and the soybean oil's down 24 cents. So to get typically a demand type market that carries the soy complex higher, often, most of the time that I've been in this game, and it's only 5 decades, it's meal driven. That doesn't mean oil can't come alive and take off on you. But right now it appears to be that spread switched over today back in meal's favor over oil. In the corn market, we're trying to push out the upper Bollinger Band. Now, what did the market do here? This is so important. The market on this day lost its embedded reading. See, one of the numbers is under 80, and back here they were all over 80. Then the next day, it also kept it lost. So that's 2 days. You can't re-embed. Therefore, today's the first day where both numbers are back over 80. It's at a resistance point. If it can break through the resistance, the next resistance is 409. Doesn't it sound like a car? 409? Yeah. And I'm a car auction guy. The 409 level at the 100-day average of closes. In the wheat, you're there. Wheat has been fighting a battle. Look at how often at this 18-day average of closes. That's what I like about bias. Remember we talked that I call this the line in the sand? Well, when the market's over that, I have an upside bias, which means I'm not looking for sell signals. I'm looking for, are my other indicators flashing a buy signal, or are they neutral? If you were to get under that and then you get the swing line down, it's different. You haven't. So this is still in a buy configuration. The negative is you've hit the Bollinger Band top, and again, you've made your run at the upper Bollinger, the 100-day average. You could get over it. How do you break out on charts? Out of sideways action. What would you call this? I'd call it pretty sideways right there. So if, and this is a big if in quotes, if the market wants to run, the key is to get over these numbers and make it painful for the shorts. Right now, I think the pros took some money off the table today. That doesn't mean they've given up their positions. In the sugar market, battleground is that 18-day average of closes. And again, here's an embedded reading that you lose, and you went right to that number and you've stalled out. Now the market has to make some decisions. The 18-day average is 1244. You settled 1246. You did not keep the bias down. So we've had a market that failed against the 100-day average, fell back to that 18. Throw the name of the chart away. You know, you learn the patterns, and the market's trying to figure out what to do next. It is correcting. When you're embedded and you lose it to the bullish side, you inevitably get into what's called an overbought condition, and you correct it often by sideways to lower action. Coffee market, still bearish. Once this market just fell right here, see this outside day up? You take out the low of an outside day up within the next day or the day after, it's a trap. And especially if you can stay down through it, which is what this market did, and now you're to the lower Bollinger Band and running it. So you've caught a group of people here. How far down? Don't know, but you're already in oversold territory. The odds of keeping it down, you'd have to embed the slow readings, and you're not even trying it yet for me to get excited. Let's go back to the cocoa market. Here's cocoa without what? We got the higher highs, higher lows. If you take out 2440, you kill this. So often you'll see me say, if the 18-day average doesn't hold, what's under that to support it? Well, we had the 100-day average. And what did the market do today? Came back fighting at both of them and settled back there. You're out of a trend. This market's looking to see what's the next thing it's going to do. It found support at those two moving averages. In the cotton, the market, to me, threw out a sell signal in the morning that failed in the afternoon. Why failed? Because you closed over the 6112 number, which is the 18-day average of closes. So the swing line is down. You failed right where I thought you were going to fail, and it couldn't manage to close under that 6122 area. That does not mean it's bullish all of a sudden. First of all, it can't turn bullish the way that my work operates. Why? I've got a lower and low. Even if you take out this number here, 62.27, you're right into key resistance, and you'd have a lower and low, higher high. Settle underneath the 61.12 and everything turns bearish, especially if momentum turned down there. In the cattle market, as long as you keep the embedded reading, my contention is that pullbacks in this market are supported, and that's so far what's occurring on the chart. It's still in a bull pattern. You lost your embedded reading in the feeder cattle. That would not surprise me that with that, the market tries to get back down into the support level of the 18-day average to the 100-day. Now, in fairness, you're overbought at this point. If the market clears 142.50, I'll be scratching my head if it doesn't take out yesterday's low of 140.47.5 at 75 points lower. What's the chart pattern? Well, a couple of things. You got divergence. You've got momentum pointing down. You've got the bias up and the trend up as I define it. In the hog market, let's talk about craziness. You went limit down yesterday. That's the most you can go in one day. Market hits the lower Bollinger Band, and I realize people are going to say, the Chinese aren't buying any pork, and all that's exploding with the words between the U.S. and corporations now. I hear China's after an Apple application at this point. But in any case, the market comes down to it. Today, you hear all this bad news, the market goes up 315 points. Yesterday, it was down 300. Today, it makes it all up, and what number does it stop at? Two numbers. The Bollinger Band and the 18-day average of closes. You talk about craziness, you've got it. Are you trending? Nope. You got a higher high, lower low. So it's wild in some of these markets right now, and that becomes an opportune time some ways. Other times, it's ways to stay away from the market. You've got to figure out what your game plan is, what you think, and then you go to the chart and you throw all that away. What I love to tell people is when I teach, cover the name of the chart, write down, if you can, if you have a way to do it, gee, I like this chart A, B, and C, then let the chart tell you the name of it again, and you go, whoa, I had that, I was friendly that, or I was bearish that anyways. Look at that. I know you're not going to do what I just said, but believe me, it has an impact if you do it, and you start learning to throw away your thoughts. We cover that and a lot more. You know, during the day, I don't know if you've tried our charting service, but during the day we have an oral commentary throughout the day on the markets left and right. I don't know if you're aware that we talk chart patterns during the day. So our people will tell you what's going on, where they're seeing the support, volume good, bad, options traders are doing, so on. Gives you ideas, and they're all broken down into these categories as well, as is our written information that we can dump into your mailbox, or it comes through our charting service right there, and you go into the area where all our reports are. Would you like to try it? It's simple. All you need to do is go to our website, hit free offers, sign up for these offers. You can call my staff. They'll get you set up in 5 minutes, if not under that. You can click here. It'll take you right to the free offer page as well if you're watching me on YouTube. I'm Ira Epstein. You have a great day, and I'll see you all tomorrow.